Good morning, Avani. Thank you for joining us here on First Take. Always a pleasure speaking to you. Now, Nifty has declined in the last 3 out of 4 weeks, and it's down about somewhere 600 points or so from the recent peak of 22,124. But on Thursday, we saw a sharp recovery in the last half an hour of trade, and even today, bulls are pushing the markets higher. Do you expect this pullback to continue this week? And if so, what could be the potential reversal points for the index?
Good morning, Suyash, and a very good morning to all the viewers as well. So, as you rightly pointed out, this week is a data-heavy week, and volatility is going to take the center stage. Now, as far as index levels are concerned, it's a dead cat bounce in my view, and Nifty, as long as 21,750 level is not, reclaimed on closing basis, till then it would remain a sell-on rise market, and this particular pullback rally can continue up to around 21,700. The first resistance point being 21,550. We are currently hovering around those levels. In case of today, it closes about 21,550, we would head up to around 21,700. But there is a very high probability that from around those levels, we may see another round of sell-off coming in. Volatility is going to pick up, and there are factors like the crude oil, the surge in crude oil prices that could affect negatively and going ahead. But the overall on the downside support is at 21,200 immediate trading support level, and the next support level is 21,000. So I think more or less until the budget announcements are done and something concrete comes out of the announcements, till then, we should be trading within a broader range of 21,200 to 21,700 on Nifty. And similarly, Bank Nifty is a slightly weaker index compared to Nifty. And in Bank Nifty, even the rollovers were seen at 77%, which was a tad lower than its 3-month average. And if you notice, it was mostly long unwinding. The entire January month was mostly long unwinding and some bit of short addition. These shorts, I believe, have been rolled over to the Feb series, but they are to a smaller extent. So as long as 44,000 support holds, I think there will be an attempt on the upside to test around 46,000 levels. Immediate trading resistance level is at 44,400, 45,600 on the upside, and 44,400 is the support level. So this is the range we can look at. Again, Bank Nifty, the viewers, it's a sell-on rise market. Fresh longs only and only once it closes above 47,000, which is pretty far away. So our view for the month is slightly on the bearish side. Not much of a downside, but yes, from the higher levels, we could see rounds of sell-off coming.
All right, and Nifty Bank is actually about 240 points shy of the resistance levels that you have put out there, and it's up almost 1%, in fact over 1% this morning, and it's being driven by that HDFC Bank stock. It's that too is up over somewhere around 1 to 1.3% this morning, and this is on the back of RBI allowing LIC to acquire an additional 4.8% stake in the lender, taking it stake to about 9.99%. Now, for the benefit of our viewers, it must be noted that it's just a provisional note, and it does not necessarily mean that LIC will go out there and raise its stake in HDFC Bank. But Avani, coming back to you, a good sentimental booster as far as HDFC Bank is concerned, and it needed that, isn't it?
True, Suyash, it's a sentiment booster, but if you see the stock reaction today, I mean, the kind of sentiment booster it is, we are not seeing that converting into price movement on HDFC Bank. It should have rallied quite a bit, but last week HDFC Bank had given a breakdown below the support level of the crucial support level of 1470. So I believe a pullback may continue up to around 1470. Probably, in fact, not even 1470, around 1465 to 67 levels to be precise. And we may see again a sell-off from those levels. In case this news does not play out, even it's a provisional news. It's not compulsory that LIC may buy a stake in HDFC Bank. So My view is on the downside, 1400, 1380 to 1400, the lows that it had made last week, that's a very, very crucial level. In case if that level breaks, then we are heading towards around 1270 levels. But as of now, the probability is less. It should trade between 1400 to 1470. And but fresh longs should be taken only if it closes above 1470, which was a breakdown level of last week. So as of now, no trade. In case if it comes close to around 1465, 67, I would prefer taking a short bet with a stop loss of 1470.
All right, that's a view on HDFC Bank. Still not looking too positive. Above 1470, you can add fresh positions near that level. Perhaps take a short position. But moving on, Tata Technology, now that has reported its December quarter numbers. The numbers came out after the market hours on Thursday, and it was a first earning report from the company after getting listed. As you can see, the numbers are there on your screen, and net profit was up somewhere around 6% on a quarter-on-quarter basis, whereas revenue surged by about 1.5%. EBIT, earnings before interest and tax, was up 11%, and margin increased by about 141 basis point. But Avni, coming back to you, the stock, after getting listed, after that bumper listing that we saw, has been trending lower. It's down about 12.5%, in fact over 12.5%, and very close to that lowest levels it has seen on the price. So what's your view on Tata Tech?
So Suyash, technically speaking, we do not have enough data to look at the stock. Technically, it won't do much justice. But if I can give you a short-term view, since we have enough data for the short-term view. So for 1138 is a very crucial support level. In case if that breaks, then it can head down to around 1125. And on the upside, 1165 to 1167 is the resistance area. So for the short term, it may probably trade in within this range. The bias is definitely negative at the current juncture, but not much of a data point to call it a 4 to 5% move on either side.
All right, not enough information on the price charts to take a call on Tata Tech. But before we let you go, Avni, what are some of the stock recommendations in a market like this, which have been rather choppy?
So Suyash, we have last week we had a certain calls, out of which two of the calls are have not met their targets. We continue with the buy call on those same stocks. One is NTPC. Again, if at all we see a dip up to 305, 306 levels, you can take a long trade in that. 322 is the target, and on the stop loss can be kept at 296. The other stock is Coal India. We are very positive on the stock. Around 385 should be the entry level. 400 to 415 would be the target for this month. And I think in a very short term, Coal India should cross around 400 levels and head towards 415. The stop loss can be kept at 379. The third stock that I have on my list is Reliance. It has already moved up a bit, but you can buy on dips till around 2700, and 2640 will be the stop loss for the stock, and 2790 is the immediate short term target on the long side. Then we have Bank of Baroda. Bank of Baroda, PSU banks have been doing good compared to the private banking sector. So long trade can be placed in Bank of Baroda around 225 to 226 levels. Target would be 242 on the upside and stop loss to 19. And fifth stock is from the metal sector, which is Hindalco. Hindalco, again, the view is extremely positive. It has given I mean, last week it had a subdued movement, but it gave a good pullback by the end of the week. So around 558 to 560 is a good level to enter into this stock for a target of 596 to 600, and keeping a stop loss of 541.